Hello and welcome to today's NinjaTrader ecosystem event, effectively utilizing market-generated information in futures trading. My name is Thomas, and I'm a platform representative here at NinjaTrader. Now, before we start, I have a few housekeeping notes. Now, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team using the phone number or email on your screen, and I'll also be posting that into the chat. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen, then clicking Get Started under the Welcome section. And before I turn over the mic to Leo, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than one's initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And also, please remember that these training solicitations are not solicitation or recommendation, but simply educational in nature. Now, thank you again for joining us today. And without further ado, it's my pleasure to welcome into the Ninja webinar, Leo. Take it away, Leo.
Hey, thank you for having me. And while I get my screen share started here, I just want to thank everybody for joining. And hopefully you've had a productive session as we had the 30-year bond auction that created some nice volatility, and then Jay Powell speaking later, in the afternoon. So with that range compression, we got some expansion today, and something that we all probably enjoyed. So today we're going to be talking about some of the most essential tools for trading as a primary intraday trader slash scalper. And so let's dive into what that's going to look like. So first, we're going to start off with MGI. Obviously, for some of you more seasoned professionals, you know what MGI is. You probably use it every day. We'll talk about how what we do with it is easy to automate, populating those areas or levels of interest automatically. Then we'll talk about balance and some market profile concepts. And then we'll dive a little bit into volume profile, or a very unique tool that we brought to the market with regards to volume profile. And that all ties into what's called AutoPlot. So AutoPlot is a package of tools that we've come up with as OrderFlowLabs that deal with these three items: MGI, balance and market profile concepts, and volume profile. So with all of these things, they're all packaged in one unique package called AutoPlot. Today, AutoPlot is available with our standard subscription with the rest of our tools. And for those that don't know, we were on NinjaTrader ecosystem webinar a couple of months ago, diving into the ins and outs of our order flow based tools. So you're more than welcome to go and review that recording and that webinar to get more of an overview of the order flow specific base tools that we have. And this AutoPlot package is going to be in addition to that. So if you sign up with us, you're going to get not only just the order flow tools and whatnot, but also everything that we're going to cover today with respect to MGI and AutoPlot. Also, just as a primer, we are working on bringing AutoPlot as a package by itself, as standalone. So if you don't, or not, you're not looking for the proprietary tools, or don't need any of that type of information or access to Discord, etc., the AutoPlot package eventually will be available by itself as a standalone product. But just to be clear, today it is part of our standard offering. So diving right in, what is MGI? There is information that's generated by the market from market and participant activity. It's pretty simple, right? Why is using MGI important? Well, one, we can create trading opportunities from it. We can gain market context and understand our roadmap for where the market's been, where we're going, where we're likely to go. We can obviously identify very important areas for the market and where it's trading. And that all can guide our decision making on what areas that we want to engage with and what context we want to take the market from, utilizing this information from the market. So the types of MGI that we look at from an OrderFlowLabs perspective is daily. So that would be the regular trading hours. So from the cash open, I'm Central Time, so that's 8:30 to 3 p.m. And then also the Globex timeframe, so that I would consider that at 5 p.m. To that 8:30 timeframe. So the daily MGI really technically is probably two sessions, if you will, but we actually incorporate those two sessions into just one daily MGI tool. Then we have our weekly MGI. Obviously, that's taking all of the weekly timeframes into play, and then the monthly MGI. And so we'll cover those and the details on what's included in that here in just a minute. But one thing that's extremely important, or I think the value of being able to have some of this information, is to pull stats. So because we can automate, putting this on a chart, then you can obviously export it and you can run some statistics on, certain things happening in the market. And you've probably seen examples of this if you've been trading for a while. But we post these every 2 weeks within our Discord. And, it covers, average volume range, overnight high, overnight low breaking, both sides or either side, the initial balance breaking, and how many times that's happened in all of these different products across the board. And what that allows you to do is to take into consideration a trading opportunity. So for example, I'll pick on the low hanging fruit, overnight low or overnight high. So either one of those being broken occurs, and this, according to this screenshot taken October 20th, from the last 20 days, happens 95% of the time. So I'll give you a real world example. Say we're trading into an area that you're interested in. Maybe you've got a level marked or LVN from a higher time frame, or just something that is important to your process, and it's 5 points just before an overnight high or an overnight low. What are you likely to do there? Well, if we're trading into an area that I'm interested in, and it also happens to be 5 points away, say from the overnight low, and the market's trading down, obviously that area for me is probably going to be support. So that 95% of the time, that overnight low is going to get taken out. Now I may take that area of interest that's just in front of it and hold off and see what happens when we get to that overnight low, because we're very likely to trade into the area. So that's saving me from engaging with an area that may not be advantageous. And you can obviously do that for many different ideas where, the flip side example of that is if you haven't broken the overnight high or low, either side, there's a likely chance of that happening. So now, in this case, if I get into an opportunity, then I could use that overnight high or overnight low as a target for runners or for a core trade, or just depending on where you're at. So this allows you to come up with that context, some tradable setups just based off the MGI that the market's giving you. So what is included in the daily MGI and what do we use at OFL? So we have the value area, that's RTH. So anytime I say RTH, that's going to be regular trading hours. So think cash open, and then Globex would be the overnight session essentially. So we have the value area high and low POC, Globex value area high and low POC, the opening range high, low, and mid. The mid being the middle of the high and the low. Then we have our prior day high, prior day low, prior day close, as well as your Globex high, low. We have our VWAPs. So we have RTH 24-hour VWAP, the RTH mid being the middle between the high and the low of the session, 24-hour mid. Initial balance, which is the first hour of the trading session. So you have your high, low, and mid from that. Now, obviously, as a trader, you can see there's 20 different levels just based on these bullet points here. I don't use all of them, neither should you, but because of the flexibility that we give you to pull from this list, you can basically dictate what's important to you, what levels you're going to use, and you have the flexibility. What is very unique about what we do with MGI also is that as we transition from each session, so for example, when we go from RTH to Globex session, there's an option to remove the old levels, right? So if today I had the prior day high low as certain levels, then at Globex open, that would transition to the correct prior day high low. So you're not having to go in and mark out all of these levels that you're interested in every day, and that alone can save a significant amount of time. Then we have the same on the weekly and the monthly timeframes. So weekly value area, point of control, the week open, the prior week information, the weekly VWAP, which is incredibly powerful, just knowing where that is, and then the prior week high low. Same thing with monthly. So because we are order flow based, and we're really diving into volume profile and overlapping value and things like that, we're definitely keying in on where the value area is, where it was, how we're migrating around, either overlapping above or below, et cetera. So that is what's going to give us the context from our perspective on where value is sitting in the market. And obviously, that's 70% of the trading volume is that's what defines where value is. So when the majority of the volume in the market is, we want to keep our eyes in context within that time frame. So here's just an example of kind of putting that picture together. This is a 60-minute chart that has weekly and monthly MGI. This is from my personal trading chart book. And so what I wanted to show is that, yes, I'm combined the weekly and monthly timeframes here. And we actually just, from this screenshot, we can see that we have just transitioned on a monthly time or a weekly. So this was basically at the start of a new week. So you can see how at the start of a new week, we have these lines that now draw, and there's nothing behind it. So I don't deal with any clutter. And I have that prior month information there. So this is just a way for me to illustrate, yes, there's lots of MGI that you can pull from. Obviously, nobody's using all of it, but you can put it together in such a way that it is, still simple, and there's not, some level every 5 points or 10 points, because that's not the intent. One thing tidbit from my end would be the G line, as the green line here, is the week open. And I would say that, as somebody that's always honing their craft and looking at new pieces of information, the weekly open is not something that I ever paid much attention to until about 8 to 9 months ago, when we were working on a project that had to do with weekly average ranges, and we just had the weekly open on that, and I realized how powerful that was. So I would encourage you, just as a side, track that weekly open and even the prior week open as well. So you can see on the right side of my screen here, I have the prior week open just marked as a tab, and then the week open, I call it the G line, just as a funny thing. But this is a very powerful level. Obviously, context and all of that is still important. There's nuance, but if we are significantly above it or significantly below it, and we do end up retesting that later at the week, I definitely look for trades off of that area, and those can be very powerful. As you can see here, with support, kind of got through it here, and then definitely, had many closes below it. And then we, retested it and ultimately drove down to that prior month close. And then, actually had some nice trades off of that prior month close. So there are powerful trades that you can have just from standard MGI. Hopefully you guys are aware of that. And what we're going to be able to do for you is just automate that, so that you're not, hey, we're, every month having to track down where was the high and the low and all that stuff. And every week, it's all being done for you, saving you a significant amount of time. So if I can transition to balance areas, the next couple of sections here, we're going to talk about more concepts, probably for you market profile folks, that you would recognize. So the first one being balance. And for us, balance is just area where volume or value is overlapping. So in this section here, the dark shaded areas on these volume profiles have overlapping value from the prior session. So basically, we're building out what a balance is, or where value is overlapping, where everybody's finding value from a session. And then everybody knows, or should know, that we go from balance to imbalance, right? So the market will chop around, we'll trade around the same area for quite a while. That's that compression of ranges, and then we'll expand ranges, and that expansion is happens in the term of imbalance, right? Where we break out of the range, we break down from the range, and then we trade in a one direction versus unidirectional or two-way auction. So that imbalance range break is, for us, we determine that by non-overlapping values. So you can see here that we're building this value area on this balance area study. And once we don't have the overlapping value anymore, then we consider that a break from balance. And, we're looking to leave this area, and, retests of the balance area and things like that could be tradable opportunities. So AutoPlot is going to automatically map that out for you. So you have a clear range, clear area to gauge, so that you know where we are in balance and when we're leaving balance. So here at the bottom, we have a clear balance area where value is overlapping in each session. Then we have ultimately a breakout, and then we return to balance, and then ultimately breaks out again. So, the market doesn't always work in this perfect illustration like this, But essentially what we're trying to help guide you as a trader is, when you should look for, reversion type of trades, or when you should look for those momentum trades where we're actually breaking out from a trading range. One of the things that we built into the study of balance areas is the peak and fail sequence. So the market's in balance, we trade below it or above it, and then the next day return back inside. What we expect to happen, or what happens often, is when you have that peak below or peak above and back, value, then the next day is back inside that balance area, is that you would ultimately go test the other side of that balance area. So when you can see this pattern, you have a really clean, setup and directional trade idea that can take you from, somebody might be very bearish here, thinking, okay, well, we're breaking out a balance and we're going to continue. And the next day we have this gap up. So we're back inside that balance area and we think, okay, well, maybe I need to put a pause on this bearish thesis I have and be cautious of, a trade back through the entire balance area range. And that's ultimately what happened in this screenshot. We actually had an example of that today in NQ. So we had this 2-day balance area that formed over the last 2 days, and then this is today's session here. These are 60-minute candles. So what do we have here as far as the setup goes? Well, one, we have a balance, well-defined balance area. We have our prior month high here. That's very important. So once buyers get to that swing high on the monthly time frame, we want to see that get taken out with force and momentum. Otherwise, there could be a failure there to make a new high on the monthly time frame. So what we're watching for here today is to see if these attempted breakouts were going to hold, but ultimately, obviously they didn't. And so the trade opportunity here is one, once we continue to reject the selling, to reject these upper areas, get back into these 420s, then we know that, hey, we're still in this balance range, and at the top of it we've failed. So if I'm looking on the bearish side, maybe I should be a little cautious there, or hold that thesis because of these events happening. And what's not happened is we didn't hold that breakout, and so that would stop me from trying to buy every dip and get more on the train of, hey, we're going to go to the other side of the balance area, which happens to correlate with prior week high. So this is just one example of that in action, just happened to set up today. So what do I look for when we have a potential break of balance? There are clues always. And, it doesn't happen every time, but if you're paying attention, you'll start to lean into them a little bit. So we have a couple of examples here. We have a 4-day balance area. We have a gap down in a session. So one of the things that I look for on a potential break of balance is a gap. So we have this gap down, ultimately forms a new balance area. Then, 3 or 4 sessions later, we end up with single prints in a session. And for those that know market profile, single prints are very powerful in helping you identify a trend or trend days. And that's where the market trades in one direction. So I look for gaps. And when I say a gap, I mean a true gap from the prior day high or low, and the next day's open being completely above it or below it. So I'm looking for gaps or single prints to those single prints are going to take us from balance and break down. So we can see several examples of that. We have this gap here, create a new balance, single prints that ultimately gap down again the next day, and then formed a new balance area. So these are context clues that can help you as a trader, maintain the correct side and stay on the correct side of the market. Okay, so we just talked about gaps. So autoplot, again, automatically covering that gap for you so you don't have to track it. You can see an example of how it works just here on the right side. So you can see we open in a gap. RTH open is completely outside. So it's above or below the entire prior day's range. We're not looking at the prior day close. We're looking at, are we completely outside of the prior day range? So if we have that happen, we'll have that auto plot study draw that gap zone automatically. And then as you trade into it, you'll see that gap zone getting cleared or shrinking so that hey, there's this much of the gap left, or hey, we've cleared the gap. I know that there's lots of traders that have setups to trade into the gaps or trade away from them, etc. So this will help you not only know exactly where they are in real time on, say, a lower time frame execution chart, but also on a larger time frame, you'll see where those gaps in the auction occurred, even on a daily chart or 60-minute, 4-hour, etc. Single prints this is obviously a market profile concept. So essentially, when a 30-minute period does not have overlapping wicks from prior periods, those are single prints traditionally plotted on a TPO chart. And the cool thing here is that Autoplot's going to automatically draw those no matter what chart that you're looking at. So you don't have to be on a TPO chart to see it. You can have an execution. You can have those draw on an execution chart. And as far as the zones go, they work just like those RTH gaps so that you can know when there are single prints happening in the market. And for me, the biggest rule that I have with respect to single prints is that, hey, when those form, the market is likely trend. And for me, I am not going to fight a trending market. So when I have single prints developed, in a session, then my trade setups are completely one directional in the direction of that trend and not the other way around. As I'm sure many of you have had, experience trying to fade a trend day, and that never ends up well. A long time ago, I, posted a Q&A on Twitter about, hey, what is your strategy to fade trend days and how successful are you at it? And I didn't get any answers. So, I know that a lot of people have tried to fade, trend days or mean revert trend days, and it doesn't always work out very well. So this is going to not only help you identify that the trend day or that trend is setting up, but also tell you where those areas are so that you can, you have some trade ideas that you can trade from them. And then we have the poor high and low. So this is where, the 30-minute period has the same or equal high of a prior period at the higher or the low of the day. And so that's automatically, again, going to be, plotted here. So you can see there's, poor high here. We have a poor high here. You can manage the tolerance and the number of ticks. So for example, if you think, a poor high for you equals anything within 4 ticks, you can dictate what that is, or you can, shrink that. And then obviously if that poor high or low gets taken out, then we'll automatically remove that line for you. And as you know from market profile, or if you have you've gotten into that at all from a market profile standpoint, usually that's a sign of exhaustion in the market from one direction. And but there's still referenced as poor areas or poorly auctioned. And so lots of times those will be revisited and traded through and given a proper tail, a proper wick without the same periods having the same high or low. So putting it all together, again, kind of like MGI, the concept here is, hey, yes, there's a lot going on with respect to what's available, and definitely you don't need to use it all, but this kind of helps you understand on that larger time frame, gives you a roadmap of where the key zones are. Here's our balance area. Here's single prints showing us that we're leaving balance, and then here's the next day we gap up. And so we don't want to fight markets that are trending and gapping. So this is going to help us give us that context of like, okay, we just had 6 days of balance. We broke out of it with single prints, and the likelihood of us, going lower at this point in time is less likely, especially after this gap. So all of this is going to help you as a trader get context. And the most important thing is that it's always consistent. So you're always, I know balance areas can be subjective. We can draw a balance area based on highs and lows and just say, hey, well, this is a range, obviously, or, look at a volume profile and say, we have a distribution area here, which is balance. That is still contextual, whereas this, it's all coded and has rules that you understand. And so because you understand the rules and you know how it works, then you can take a consistent approach to how you're looking at the market from a longer time frame, and helps you give the confidence to that, so that that roadmap that you're looking at gives you the proper information. So here's a example of the same with autoplot on a TPO chart, because you can place it not only on a candlestick but a TPO chart. Here's what it would look like on a candlestick chart, and so you don't have the you don't have to stick it in one area. And for me, I take a mix of having it on a larger time frame. So I might have it on a 60-minute chart, for example, like this. So I have auto plot on my 60-minute chart. I just took it off of this screenshot just because this was just dealing with MGI. So I have the balance areas, and then I'll have gaps and single prints on my execution chart, because those are more important to me in real time. And so I know where those areas are when we're starting to form single prints right away, because that's where my eyes are visually 90% of the time. So I'm going to pause the screen share there for a second and reload a video. So just give me 1 second here. Okay, so the last piece in autoplot is leg-to-leg profiles. This is something that one of our other co-founders, Book of Job on Twitter, really kind of got out there into the wild, and we automated, doing that. So leg-to-leg profile is essentially taking a leg of a market, a swing high, swing low, and drawing a volume profile from that swing point and allowing you to see where that volume is driving, where those LVNs are, and where volume is building. So the great thing about this is you can have multiple of these volume profiles with the flexibility of doing 1 swing back, 2 swings back, 3 swings back. Oh, they're aired out on me again. I apologize. But essentially, because the last thing I want to be doing as a trader is, pulling out drawing tools and moving things around. I want to focus on the auction, the DOM, time and sales, the tools that we have from an order flow perspective. And so when I have any automation that I can do, just like everything else we've been discussing, the volume profile automating the leg of an auction for me is incredibly valuable, because now I know where there are low volume areas on a leg down. And because it's automated, as soon as we make a new leg, then it's automatically going to make that update for me. And I don't have to worry about constantly, drawing new volume profiles and things like that when I want to look at certain legs at the auction. So just in summary, MGI, weekly, daily, monthly, included in auto plot, balance areas, single prints, pour high and pour low, the leg to leg volume profile. That's what is included within auto plot. And that's a package that also, comes with the 20 other studies that OrderFlowLabs has. But as I mentioned, we do intend on releasing AutoPlot by itself. The way to get on that sign up list is just go to our website. There's an email spot where if you want to get notified when that AutoPlot by itself gets released, you're welcome to do that. Otherwise, you can sign up for the full set of tools at OrderFlowLabs.com. That's going to get you the AutoPlot plus the order flow tools and access to our Discord and all the other benefits that come with our community. So that is really the end of the agenda from our perspective. So I know last time, there was a spot for Q&A, so I'll pause there and I'll turn it over to Q&A for questions. I can pull up the chat real quick. So we'll hang out here for just a second, see if there are any questions. There will be a recording, I believe, on, either tomorrow or Monday, but that will be emailed out to everybody. What kind of education is provided to learn how to use the indicators? So that's a great question, Andrew. When you sign up to OrderFlowLabs, you'll immediately be given a link to our Discord where you'll verify your purchase, and you'll be given the proper files to get installed into your NinjaTrader. And once you've got that set up, there's a section in our Discord for EDU, just for setup and explanations. So each individual tool that we offer has a dedicated area that has, hey, here's how to place it on your chart. Here's some trading context around it. And then we have monthly, weekly webinars that cover the utilization, as well as a chat room that all the other traders are using to discuss some of the nuances. Does this apply to intraday trading or swing trading? The autoplot balance areas can definitely give you an intraday perspective or a swing trade perspective. It just depends on what your specific risk to reward measurements are looking for. This from a swing trading perspective, I would say the single prints and the MGI, the longer time frame MGI, are going to give you the most benefit because you're going to have a very clear picture of when we're in a longer time frame balance and where that is respect to important weekly or monthly areas. All right, well, I think that concludes the Q&A section. I don't see any other questions in the chat, so I am going to turn it back over to the NinjaTrader team. And I want to, before doing that, thank everybody for attending and for the questions in the session. and look forward to seeing you guys out there in the wild.
All right. Well, thank you again to Leo for taking the time to share with us today. If you enjoyed today's session, we hope you will join us in future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of OrderFlowLabs and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.